Good evening and welcome back to the Australian Stock Market Show. My quote for tonight comes from Venus Williams. I don't focus on what I'm up against, I focus on my goals and I try to ignore the rest. Such great advice, and we can use for today's market conditions. Our aim as we give you our upfront no BS approach is to help you ignore the noise so you can focus on your goals. For our main topic tonight, we take a look at the top 10 dividend stocks to buy in 2022. So stay tuned as Dale and I get into that and plenty more. Hello, I'm Janine Cox, your host for tonight, and joining me is Dale Gillham, and we're Australia's most trusted stock market educators. Good evening, Mr. Gillham. How are you?
Good evening, Ms. Cox.
You doing well?
I'm doing fantastic.
Hey, I think, Coles, which is a listed stock on our exchange,
It is.
made a really great choice this week when they decided...
They upgraded their fruit and veggies.
When they decided to have chocolate, Cadbury's chocolate on
Free?
special.
Oh,
$2.50 a block. I don't know if I'm allowed to promote that. But
Well, you are. You're a chocoholic.
But I thought that was a great idea because, that brought me into their store anyway. And I'm sure it brought a lot of others down.
Anything chocolate will take you into a store. God, you'd be in linked heaven, wouldn't you, if you went to one of these shops?
I like Australian made if I can.
Well, it is, but Cadbury's is a UK brand.
I know, actually, they were bought out some years ago and I was so devastated. I was just counting the pennies and trying to work out, well, how many people would I have to get together with so we could buy this out?
Lots. Definitely lots. But can we get onto something serious right now?
You're thinking of chocolate, aren't you?
No,
I can
I'm
tell.
not thinking of chocolate anymore. But anyway, let's get back. Before I go into a deep hole, let's get into the show. Now, before we get into our first segment for tonight, again, we're going to take some live calls on the show. So if you do want to chat to Janine and I and ask us a question, then this is your opportunity to pick up your phone and call us now. The number you need to call is 0392909988. That's 03 for Melbourne 92909988. And to get things started, the first person to call into the show right now will get a free copy of my latest book, Accelerate Your Wealth. It's your money, your choice. Now, Janine, I know I am super keen to chat to people. We've got a lot of questions today and a lot of stocks to look at. So get dialing now so you get your questions answered.
While we wait for you to call, it is the fourth Tuesday in the month, and this means we take a look at the world currencies. So let's get into the charts.
All right, on your screen is our normal watch list. Now, this is the yearly currencies, correct?
Yes, as long as you haven't played with
Well, I
it.
haven't got my glasses on yet, so you've got to bear with me.
Oh, I could lead you along and tell you anything now, couldn't I?
You do that at any time. So
Okay.
Yep.
So at the top of the leaders board, we've actually got the Aussie dollar versus the Japanese yen. We're actually up 12%
For the year, that's
against the
pretty good.
currency, isn't it? Yeah, so Japan looks like a great place to go. Actually, I was looking at a program the other night on uranium, and they were talking about all the different the explosions that happened, and we were looking at what happened in Japan people are just trying to get back to a normal life, and we sort of take it for granted, don't we, where we are, and that nothing like that's happened here. So
No, we don't have any nuclear reactors, but then, I don't think we need to discuss it right now, but they were warned about that happening.
Yeah.
Going to happen, and it happened. But anyway, 12% for there. The one I'm
Okay.
worried more about is the Australian US dollar.
are you really?
Well, I'm not worried about it, but I'm just, it's much more of an interesting
Well, it's
thing.
right down at the bottom.
I know, because
why you're
obviously
worried?
that affects the oil prices and that, so therefore that affects our energy costs, all those sorts of things. So do you want to have a look at the US dollar chart?
Yes, I'd love to actually. What about the
I'm asking
Australian dollar,
nicely.
Russian ruble? Actually, the Russian rubles proved to be extremely strong in the face of everything that's gone on.
Yeah, but they're doing that specifically to hurt America, but that's a whole nother show just
We
on
could
that.
talk about oil.
Let's go and look at a chart.
All right. So on the chart there, you can see this is the monthly chart of the Australian dollar versus the US dollar. So we were actually tracking reasonably well there for a while, but still coming back. And we did say on the show last month that even though the currency was looking like it was turning back up again, that we're in a bit of a danger zone at this point and it could go lower. I can remember the Reserve Bank talking about the fact that they were happy if the currency went down into the low 60s. But with the close that we've seen this month is now 69.35, there's always the possibility that we could head back down lower, couldn't we?
So what are you thinking? It should go to low 60s or stay?
Well, if we take out last month's bar, the low of last
So that's at 68
month's,
cents?
Yep, then I think that we're heading down towards 67, 65 cents.
So energy costs are going to get higher, so therefore you're just giving everybody some really bad news.
Look, I'd say just if oil goes up, buy oil. And when I say that, I'm talking about buy stocks that are actually going to benefit from
oil.
a rising price. Yep.
Okay, cool. So do you think how long is it going to fall away for, though?
Well, generally, if a stock turns like this, it could be a number of months before we see the low.
Cool. No, that's fine. Because, I mean, obviously, this is a really important currency for Australia from, obviously, commodities, all those sorts of things. So, having the US Aussie dollar at a certain level does help our companies.
It does, but I mean, if the Aussie US dollar is actually lower, then it's better for us in other ways as well.
Correct.
In terms of the manufacturing.
All right. So is that it for our currencies at the moment?
All right, that's it for our thoughts on the world currencies. Now it's time to get into our first email for tonight.
All right, our first email question is from Al, who says, "Hi Dale, read your video, will the stock market recover in July 2022? The video, so that was last week's show. Thanks for your great videos. Wondering if MP1 is one of those great tech stocks you mentioned. I own and want to work out if it's worth a dollar cost averaging into it. Thanks, Al." Now, remember last week we talked a little bit about tech stocks for a bit, and I said, and my exact words, Al, were the top 5 stocks by market capitalisation, just not tech stocks, 5 tech stocks in general. So the answer is no, it wasn't one of the ones that I had on my list.
Actually, you didn't stumble on DCA. I thought you might.
I was going to, dollar cost. And the second thing is like, Janine and I just do not think dollar cost averaging is wise. It's just not a good thing to do. So I don't know, do you want to spend time on MP1?
Yeah, why is dollar cost averaging not a good thing to do? That should be something
because it reduces your return.
About. Well, it depends, doesn't it, on with the direction of the stock. But you're more saying that because the direction, if the stock's falling, that's generally when they're talking about doing the dollar cost averaging.
Dollar cost averaging benefits brokers and the big end of town. It doesn't really benefit investors.
Yeah.
So do you want to have a look at the chart at all?
All right, we will.
Okay.
Let's just have a look at the monthly and weekly chart in front of us there. So you can see that huge fall. Now, we've looked at this stock falling before, but obviously it's gone down further this month, so a 78.6% decline. It's not ready to buy yet, so we can't confirm that the bottom is in.
I'm wondering why Al's still in it.
At this stage, but it may actually be close to the bottom. So it's because it's fallen that far, what's the chances of it turning around? I mean, it could always go lower.
Yeah.
It could head down to $3, but I would be just looking to see whether it's close to a turnaround and see if we can see some support at this level.
Yeah, definitely not one of the stocks I was suggesting. And I mean, the tech sector rose 6% last week, and some stocks like Xero and a few others took off like rockets. And to me, that's just people bottom picking.
Still too early.
Way too early to determine whether this is it's the tech sector's turning around. We think it will, but right now, way too early. But anyway, Janine, we do have a live caller on the phone. Welcome to the Australian Stock Market Show. You're on with Dale and Janine. Who have I got there?
Jay from Sydney.
Jay from Sydney. Oh, fantastic. Welcome to the show. Thanks for calling in. Do you have a question for us today?
Well, yes. First of all, I would like to thank you for, writing such a insightful books. Well, I've just gone through your first book. Yeah, but unfortunately, I went through your first book after losing so much of money in the last 2 years. And one more thing is, I've joined your course yesterday, and I'm starting the course from coming Monday.
Oh, well done. Congratulations.
And, yes, thank you very much. And the question for tonight is, AKE. I've got a stock that is in my watch list for the last couple of months, and, AKE is the ticker code. And, just wanted to, get your thoughts around it, the trading pattern, and is it a good time to buy for next 10 to 15%,
Okay.
So,
would you mind just telling me what the name, what was the
ticker
name?
code again? I just didn't quite get it.
sorry, AKE Alchem.
AKE, is it?
AKE.
Okay, yeah. I was thinking, right. I was hearing T in my head, and I went, no, I don't know that one.
Oh, sorry. Maybe I'm pronouncing it wrong.
No, it's just correct. My Aussie accent. I hear in Aussie. That's fine. Okay.
Yeah.
Thanks for giving us a call. Janine's got it up now. We'll have a good look at it for you. But thanks for calling in.
All right. On the screen there, you'll be able to see AKE. Now, it's had an incredible run, Dale.
It has had an incredible
run. Really
run.
Boomed, hasn't it? But over the last couple of months, it's really struggled to get to continue that rise. So we saw this sideways move here from August to 2021, and then it broke out, but it's more or less just come back into that range that it was happy with. Yeah.
Nice bar this week so far, but it's only 2 days. It's only yesterday and today, but whether it's found support, it's a bit too early at the moment, isn't it?
It is a bit too early, but, you know, the risk is it could rise for a bit, up to about $12 or thereabouts, and then turn down, so I'd be watching this one carefully.
Yeah, this is what I was saying, you know, regarding, on my market report yesterday, I said the market moving up last week, you know, a little bit, the tech sector moving up a little bit, well, a lot on Friday. It was not doing too much earlier in the week, but a lot on Friday. This could be a suckers rally just before a final washout in the marketplace. Now, the people that jumped into tech stocks on Friday could be right. They could be jumping in and getting the right early, getting in cheap is what they're talking about, but they could get their fingers burnt really badly too.
True.
So right now it pays to sit on your hands and take a little bit easy. But I just want to say good luck for Monday for starting the course, and love to hear your feedback once you get started.
Well done. It looks like we have another caller on the line. Welcome to the Australian Stock Market Show. Who do I have there, please?
Yeah, this is Kevin calling. How are you?
Kevin, very well, thank you. And yourself?
I'm excellent, thank you. Very cold. I'm from Melbourne.
Oh, look, I can feel what you're feeling. So, yeah, isn't it?
What's wrong? It's hot.
You have to get the gum, you know, what are they called? The Ugg boots?
The
Ugg boots out?
Yep. I'll be in mine in half an hour.
They keep your feet warm. So you've got a question for us tonight.
Yes, I was hoping you can have a look at Cobalt Blue for me. I don't hold the stock. I'm just watching, sitting on my hands, just waiting.
Okay.
Just hoping you can look at the charts.
Yeah, anything in particular about it that you're interested in?
Oh, just to put some money in it, leave it there for maybe a couple of years and see where it goes.
Yep. Okay. Thank you very much for that question. We'll have a look for you right now.
Thanks, Kevin.
All right,
Kevin.
thanks, Janine.
All right, Cobalt Blue Holdings. It actually was looking really nice, wasn't it?
It was looking really, really nice back up here when I was doing, you know, it was up around that $1.07, but it's fallen quite heavily. It's fallen around 40%.
This is one we haven't talked about ever on the show.
I don't think I've seen this stock ever on the show, so well done,
Good on
Kevin.
you, Kevin.
Down 46% at the time, and right now, currently, as of today, it's down 41%.
Pays to be patient.
Pays to be patient because, you know, you've had that big blow off right through to here, but what are you seeing?
Look, at the moment, I don't think there's any opportunity in it. I would just say that there's a potential for it to find support where it's come back to. If we see a rise out of it, it's not even really going to look interesting until it gets above that 80 or 90 cent mark, and then it needs to be showing some real strength going up around these levels here to confirm that it might take out this high. But it's at an interesting level right now. But it has to get back through that.
Now he's saying what, a year, 2 years, 1 to 2 years.
Yeah, look, he was talking more. That's longer term for us, isn't it?
That is
really.
Longer term. This is a trading stock. It's not an investing stock. When I'm looking at this, and I saw a few of those yesterday on my market report, and a lot of people get them confused. You know, they buy in stock and they go, I want to have this for 12 months to 2 years. But they're really trading stocks, and you really need to have trading rules around it, not investing rules around it, because they do take off like rockets. And
looking at this one, 1, 2, 3, 4, 5, about 6 or 7 months up, and then here it's done the same thing, and then it falls for about 6 months. So I don't know if it's going to do the same thing now, but it's at least got to get a strong rise happening on it before we know whether it's going to go up again or not. Otherwise, it could just keep falling.
Interesting, though. It's an interesting stock, isn't it?
It is.
Cool.
Very good.
Kevin's done well for having a look at that. But we've got another caller on the line. Welcome to the Australian Stock Market Show. You're on with Dale and Janine. Who have I got on the line?
Hi, hello, Dale and Janine. It's Matt speaking, calling from New South Wales.
Fantastic. Well, welcome to the show. What's your question for us tonight?
Okay, I've been loving your shows. My question is regarding Investigator, the code is IVR. Investigator Resources.
So it's I for Indigo, V for Victor, R for Robert, the stock code?
Yeah, correct.
Fantastic. Yep, so go on.
Yep. So what happens is I jumped into this stock last year, similar this time.
Yep.
The cost was 6 cents. And because I thought that it's going to just coming back from a sharp fall and possibly going to draw a U shape or cup shape. However, in last year, November, and earlier this year, it jumped to 8 cents or 7 cents, but I didn't sell it. I still hold the view that it will ultimately going up because it's a precious metal and the company has good mine. However, recently, the share price is going to down.
Yep.
Of course, it's, the interest rise has a big effect on the value. But generally, my question is, one, how this company, how's the share going to be in future?
Yep.
And secondly, is regarding the precious metal like silver or gold, generally, what's the hypothesis or what's the perspective as a small investor should be holding?
Okay, gotcha. Just one question: Are you an investor or a trader?
Well, I think I'm a trader, but for this one, I'm happy to investing in this share for longer term instead of.
Gotcha. Well, you must be because you've been holding it for over 12 months, so that's why I asked the question. Looks like you're more of an investor than a trader. But anyway, Janine's got it up on the screen, and we'll have a bit of a look at it. Thanks for the call.
Yeah, look, it's an interesting stock. The first part I would be wanting to look at is really the monthly chart to have it to see where it sits big picture, because he was talking about, where is it likely to head in future. And at the moment, because it's been down for so long, this last fall, like he identified, has really caused it to go down into a much deeper trend in the decline, and so therefore it's a lot more uncertain now in terms of a recovery. If it had have held above this blue line that I've put on the chart, that would be a different story. But at the moment, as a trader, you wouldn't be holding it once you've decided, whatever your trigger is below that level. Sometimes stocks dip below these levels and then reverse the following week and start moving back up. But this one clearly hasn't done that. It's even come back up, tried to test that level and then continued to fall away. So it could be getting close to a bottom, but that's always a question, and it's a much harder question when you're talking about a stock that's got less liquidity than, say, BHP.
That's why I asked him the question, is he investor or trader? Because this is definitely a trading stock, not an investing stock.
Yeah.
And by being an investor, now he's suffering a loss from where he paid what he paid for it because he's got that investor mindset on a stock that shouldn't have that mindset.
Okay.
But his other question is obviously for precious metals like gold and silver, what's our outlook on that? And really, when we've talked about that in recent shows, we've done that. When did we do the gold show? A
few months ago. We've done a few actually on gold and silver. We will do another one on that at some point if enough people decide to vote on that. But gold and silver obviously get sold off just like any stock.
Yeah, they do
at times. And at the moment, we've seen some quite high volatility going on there. Silver tends to be more volatile than gold, just because of the nature of it and where it's used, etc. For traders, silver tends to be the better thing to trade if you're more short to medium term because of its volatility, but you really have to know it like the back of your hand, not just saying I'm going to put some money into silver, because you could be putting money in during a decline. It's about looking at where it is short term, but gold is more medium to long term, definitely, because it's you can get a decent return out of gold in most years.
You can. I mean, he's talking about some of the fundamentals on IVR and talking about it's got good mines and whatever deposits and whatever else. But that's only one part of the equation. The other part is obviously currency, like we talked about before, with the US dollar currency and obviously the Aussie dollar, but also the cost of mining it too. So you can't just look at that's a precious metal and whether the precious metal itself is going up or down.
When you're talking about these smaller companies, you're right. You have to get more into what the company is actually doing. Read all the reports. Don't be very careful about reading broker reports that could be prejudiced because they have a relationship with the stock.
Yep.
It's more about finding the information that's come directly from the company, because they have to actually release information to the ASX that's correct.
Yeah. So that's probably the answer for him is that, to me, he shouldn't be in the stock anyway. Even as an investor, he shouldn't be in this stock.
But if someone's holding it at the moment and it's falling like that, it's already fallen through a potential trigger. So he's got a choice now whether to wait and see whether it starts to recover and make some judgment about that, or whether to just cut his losses and get out. That's the choice, isn't it? Okay.
So that's IVR. Now we've got an email question, or the next one is an email question. This one's a Chris. Now it's on Aristocrat Aristocrat Leisure, this one, I believe it is. So we've got the email from Chris says, I've had some training in technical analysis, largely based on self-learning through books, YouTube, etc. And I have had some success, albeit mixed. And I've been watching Aristocrat for a few weeks now, and I do not own it at this stage, as it looks like setting up for a push upwards. From my point of view, it looks like it's found support around the 50% line of the last range, broken a trend line, blah, blah, blah. I'm considering buying as when it breaks above the most recent high of $36. Keen on your thoughts, Chris. We've also got Aristocrat later on. There's another couple of questions later on Aristocrat, which we're going to combine together.
Yep.
So let's just do a short little one on Aristocrat for this, because he's asking a slightly different question, but it's pretty... In my view, it's obviously some people, self-learning through books and YouTube, it's so common for people to have really mixed results because they really don't have solid trading plans and strategies. And pretty much that's what we fix.
And it's also more about their consistency in the way that they do things, isn't that what you're saying?
Yeah, their structure, their process, and I think that's the biggest thing that we fix for people when they come and do our course is they come to us with all these ideas around technical analysis and they're hit and miss, and some people just miss all the time and some break even and some are slightly profitable.
More about the confidence thing, I think, because so many people have said that once they've actually got that structure, and even if they do have some losses, because they will have some losses, that's just the stock market from time to time. The market turns down and that will happen. But when you actually know what you're doing and you've got the plan and you've tested it and you're confident with it, you know that over time, what's the probability of being successful over time? Your study will tell you that. And I think that's the real difference with people's confidence in the stock market.
Oh, absolutely. It really is. And it's confidence in themselves and in their rules. And most often they don't have confidence in their rules, which means you can't get confidence in yourself. It's sort of chicken and egg type thing. So, but anyway, let's have a quick look at Aristocrat Leisure before we move on, because there are a lot of questions tonight.
So look, he's talking about that $36 level, and I don't have an issue with what he's talking about there. I think that's fine.
So
he's obviously got to be confident in his own decision, and he's talking in the right way in terms of looking for the right things. So, did you want to talk about the next two?
No. We'll talk about them when we get to them later on. And that. So we'll go to another question. This one's from Samit, and he's saying, "Hi Dale and Janine, I've been a huge admirer of the show for the last year or so. I've almost completed How to Beat the Managed Funds by 20%, and personally for me it has been a massive help in terms of not hanging on to the losses when stop losses are triggered. Now for tonight my question is around Lend-Lease. I was watching it for some time and brought it in the first week of May at $11.97.5. A half cent's really important, Janine.
It is, I was going to say.
Absolutely important. It showed the start of an upward trend both on a monthly and weekly chart before I bought, but since then it's been falling heavily. Would it be possible to check if my analysis was correct, or if there's something else that I've missed, which I probably would have? Thanks and regards, huge fan, Samit."
All right. Now, the first thing that I can talk about with this stock is I've pulled up the monthly chart. Because 9 times out of 10, most people don't look at the whole history of the stock to determine the nature.
How did you know what I did on my report yesterday? Because I said exactly the same thing.
Because you and I do the same thing. So, okay, when we look at a stock, we look at the big picture first just to see how volatile the stock is and whether it trends well. Now, in the case of Lend-Lease, we know that at times it trends well, but then it turns into... what does it turn into? A dog stock?
Into an ugly stock, yes.
An ugly stock. Okay, so now we were looking at this stock as well at the time when you bought, and there were just a couple of boxes that didn't get ticked, and I guess that's the benefit of having some of the rules. But look, for every one stock we've bought, we could have bought 5.
Yes,
there were so many stocks triggering rules, but you just have to have a set of criteria and tick those boxes in order to go into that. Now, perhaps you've ticked yours off and it met those, but then obviously it's turned around and gone down. Now, once a stock trades through its low, which this one's done, and it's traded through this low here as well, the trend down is continuing, so then it's really uncertain about where that low is going to come in. So I think, it's hard, isn't it, when people buy in at that point. But if we just now look at the weekly chart to get a better understanding of that, we can see here that the stock dropped really quickly. So is this the bottom? We're not sure at this stage. That's really the point, isn't it?
That's absolutely the point. And that's really what I was saying, on my market report is whilst the market bounced last week and it's up today and it was up yesterday, doesn't mean the bottom's in. Yes, it's nice.
Well, look, this is a classic example, isn't it? Because it bounced and it was tracking up. but then it's continued lower, and that can happen on any stock.
And how many callers did we have around Lend-Lease during those times?
Yeah.
We had a few.
Quite a few.
And then people go, well, it's going up, I should buy in. And they're trying to, not dollar cost average, bottom pick. Because the stock's moving up.
It looked nice, but it depend on the rules. If you had a trend line in there, you would have actually been in on the weekly chart.
You would have.
But there are other rules that work really well with Lend-Lease.
Yeah, absolutely. All right, so that's with Lend-Lease. So let's move on. So we've got question number 4 that we need to have a look at, which is from Luke, I believe. So Luke is actually saying, now I have a question from, hey, love your show. Just wondering when's a good time to buy into some blue chip stocks like Westpac. Cheers, Luke. He didn't even say hi, Dale and Janine. So he's a man of very, very few words, and I wish I was sometimes.
Well, he's very focused.
He is very focused. So blue chip stocks like Westpac, what do you reckon?
I like Westpac.
I know you like Westpac. I know you like the banks, but can we have a look at the chart? Or
I might show you something.
is it time to buy blue chip stocks right now?
No.
No. Okay.
There will be a great time to buy these stocks, to just hold tight. So looking at Westpac on your screen there, you can see this is the monthly chart. So we just showed a monthly chart of the last stock. I'm going to do the same with Westpac. Now we can see that it's taken out an important low here in January 2022. And does that look bullish to anyone?
No, it looks bearish to me.
Right. So it's going to be a while before we're able to actually confirm whether when's the right time to buy Westpac, but it's obviously not now. That's really the short and sweet of it, I'd say.
But this is not your preferred bank, is it?
Not at the moment.
It's not. Okay. So what's your preferred bank?
Commonwealth.
Commonwealth.
But
Bank
I still wouldn't buy that one right now either.
Well, that was my second question. You mind reader or something? It's like that. I want to buy Commonwealth. So right now, a bit too early for Westpac. You wouldn't be buying into it, but obviously you like financials.
Yep. Well, this is what we talked about with trends. I mean, obviously the trend is down.
Yep.
So we want to get onto the stock when the trend is up. Now, what happens at the bottom is often you get these bounces, and it's a real test of the low, and you don't know when the low comes in that the low's in.
Yeah.
It's a gamble trying to pick right off the bottom, but until you actually get some rules triggering that tell you that the stock's going up. And you can have rules on the weekly chart, you can have them on the monthly chart. It just depends on the strategy that you choose and the time frame that you're trading on.
Okay, so if Luke gets into Westpac right now, he could be out of luck.
I'm not saying that.
No?
It could be the bottom, Luke.
It could be.
Look. But it also may need to turn around to confirm first. So we just want it to test that low in June and let the what do you call it, the money that buys at the bottom pickers?
The high risk money.
Let the high
gamblers.
risk money and the gamblers try it there and just wait a little bit.
Cool. All right, Janine. Well, I do think it's time we get into our topic for tonight with the recent market conditions. I'm sure many of you will be wondering where you are going to invest your cash in the second half of 2022. Well, we have some ideas for you as we want to share with you some of the companies that we believe have the potential for good growth and a healthy dividend income.
Now, can you believe that we're almost at the end of the financial year?
Yeah, well, it's like this, Janine. I often wonder where my hair's gone, and I'm sure I'll find it with the time that I've also seemed to have lost and gone. It's sort of like socks in your laundry, you keep losing one of them. But anyway, some say you can mark the years by the number of wrinkles that you have, and so time looks to be pretty good to you.
Gee, if that's the case, how old are you?
Hey?
Well, that's a personal question.
Let's leave it. I'm young at heart, so let's leave it at all that, Janine. So should investors leave their cash in the bank earning interest, which is only going to get better in the next year or so, or should they look for stocks paying an average dividend yield or perhaps high yielding stocks?
All great questions, Dale, and I think the first consideration has to be to look at inflation and bank interest. And when we do, we find that this is not the part of the investment cycle where it's wise to put a lot of money in the bank, as over time inflation will eat up your return. Added to that, there's no potential for growth when the stock market takes off again. What everyone watching needs to remember is that the market factors in what's likely to occur 6 to 12 months in advance. So it pays to think forward. But the media drags people into being fixed on the fear of the past or future. Hence why the quote from Venus Williams at the start of the show is so apt.
Okay, so cash has not been the place to keep your money for quite some time, and from what you're saying, things aren't really going to change that much, are they?
Correct. Right now it's time to pick good stocks paying good dividends, but it's more than that. Finding companies with the potential for capital growth and a good income are a better option.
Okay, now I'm guessing that you're not suggesting all of the stocks in a portfolio should be selected with that criteria.
No, well, that's right. We're correct. Exactly. Could I say that? I probably don't want to tell him he's correct.
Yes.
We are going to share some of these companies that are likely to be opportunities for the second half of 2022, and we will share our view on whether investors should be looking for high-yielding stocks.
Okay, so how about we get into the charts and show people the stocks that you prefer right now?
All right. Now, just on your screen there, I thought I'd show a little bit of a watch list,
Okay.
Which is actually the top 50 shares.
Okay, so they're the top 50.
So they're the top 50.
We're not going to go to all 50, are we?
Can we?
Well, I know you can't count.
We did say 10.
Okay.
But if we're just looking at the top 10, you can see 10 on your screen there, at least 10. And it seems that the miners have moved up to the top. We've got banks up here as well. And the reason this has happened, obviously, is because their share prices are falling.
Yeah.
So the yields are actually, the dividend return is actually increasing the yield, which is a percentage,
Yes.
as the share price is falling.
So is this ordered by dividend yield, this
Correct.
list? Okay, I was just questioning because I'm seeing red and green there and I'm thinking, well, how's this thing ordered?
Well, at the time I was thinking, do we look by sector? Because we've just done a show where we talk about picking stocks in particular sectors.
Yep.
That we think are likely to perform well in future. And some of the ones that we've talked about have actually appeared there. So the ones in finance, which are the banks that they came up on the list. Also, we've had stocks in mining that came up.
Yep.
Now, interesting that the utilities, we've got Origin way down here. It didn't appear in the top 10, but I'd still be interested in looking at Origin, and it pays a good dividend. So any stock that pays at around the average or above the average market dividend is worth having a look at.
Well, why wouldn't people just buy the top 10 by dividend yield?
They could.
They could.
Yeah,
Okay.
that's the point. So we're just trying to be, in this discussion, we want to be flexible in what we're talking about because it's not a matter of having one view and that's it.
Yeah. So you're saying somebody tomorrow could just go and buy those top 10 by dividend yield?
I'm not saying tomorrow.
Okay, I'm just...
You're just trying to put words in my mouth there.
I'm asking the tough questions that they're asking.
Are you?
They'll be
Okay.
sitting at home on the couch or in their office and they'd be going, okay,
got
Janine,
ESP.
I'm going to buy those top 10 that Janine's got on the screen right now, and you're saying, no,
I'm
don't
not
do that.
saying to do that.
Okay.
Yeah, so you still got to assess each individual stock and have a look at its merits. So,
Okay.
like, for example, if we go and have a look at FMG, which was the one at the top of the list.
Yes.
We've talked about this recently, and right now we do not want to be purchasing FMG. It's just taken out that low. We've talked on the show about stocks taking out some of their lows, and we're better off just to wait and see and let the, what did you call it? Bottom pickers or the high-risk gamblers?
It was an S word. Let the S hit the fan. And I'm not going to say the rest of the word because you'll bring out the swear jar again. And I've been so good for months.
Yeah, I haven't had that for ages, but I really liked making it rattle. But he was very stingy about putting the money in that jar. All right, so looking
How
at
you
the
get rich.
look at the bottom here. So at this stage, obviously the dividend yield goes up when the stock price falls.
Well, that
and
was
it
my
depends.
question, yeah.
Actually, dividend yields aren't dividend yields either necessarily because it depends on how that dividend yield has been calculated.
Correct.
And it could be that the company's data that you're looking at is talking about any dividends and special dividends in a year.
Yes.
Whereas you just want to look at what are the ordinary dividends that are normally paid in that year and then make the assessment based on that.
Well, a lot of people think a high dividend means, oh, that's a great company because it's paying a high dividend yield, but it's not necessarily because often it's a sign of a stock price falling heavily because this has gone from 26 down to 16.
Exactly. And look, I mean, we've seen some really good stocks lately. I could just look at a couple of other charts here.
Yeah.
So we've looked at FMG. We like the stock.
I know we've got 10, so
we
that's
like it
one
from
more to go.
capital growth. We like it from a dividend point of view. So
Yes.
tick, all of that. Min is another classic example. This is Mineral Resources, also has peaked at
Yes.
the top. But if this turned around and started to go back up, I guess I'd be more interested in the capital growth than any dividend income.
I would
But the
be too.
dividend income would just be the bonus, wouldn't it?
Would be the bonus, yeah, correct.
If this stock started moving back up again. So I wouldn't discount this stock until it takes out that low. If it takes out that March 2022 low, that thing's going down.
It's gone a lot further, yeah.
Yep, and who cares what dividend they're paying? Because it could be that the company turn around and decide we're not paying out that sort of level of dividend. We can now justify reducing it.
Like the stock price, the dividend changes. Either if the more falls away, the dividend yield goes up, but then it's up to the board to announce what the dividend is.
Yeah.
Which they can change their mind. So.
Yeah, so investors, we had this issue not long ago. I think it was FMG was another one that came up. People were asking questions, should I buy just for the dividend? And then if the company turns around and says, right, we're cutting our dividends, then they get caught short, don't they?
Absolutely.
So look, we're going to look at another one now. Now, Tabcorp's not a stock that I normally look at, but it actually did break out recently. So
that's good.
And it's broken above $1. So it does a couple of things. It attracts a different level of fund manager to that stock once it breaks out of that point. It's broken out of this sideways move, but that doesn't mean it can't come back and test that range. It just looks a lot better than it's looked in a long time, I'd have to say. But if you weren't in it at this point, then I probably wouldn't be trying to jump in right now, is what I'm saying. However, this is a stock that it's still got a good dividend income and potential for capital growth. BHP looks interesting. We've seen a real sideways consolidation. Now, I'm just going to flick back to FMG just to do a quick comparison.
Yeah, that's fine.
They all look similar, FMG, BHP and Rio, but it's just the volatility and the pattern that they've formed on the chart that varies.
Fortescue is more volatile than BHP and Rio, isn't it?
Yeah, but if FMG heads back below this low in March 2022, then there's chances are BHP could take out its low in May 2022. So we're just watching at the moment to see what's happening. But regardless of what the media says, they might turn around and say, oh, BHP's gone up by whatever, 3 or 4%. So what?
Well, that's where I
in
think
the scheme
is
of
they
things,
get people excited about it, so then they start to jump in and only for this suckers rally to happen and they fall away again.
Yeah, because right now there's so much resistance up around here, sort of around that level where it first started to peak out in 2021 there, around that $45.35. That's probably pretty important. And we can see there's a small gap there on the chart to be filled. And so BHP may come up there to fill it, but it's what happens after that. So we don't care if it goes up to that level, fills it. We haven't missed out on anything because it's the risk we're talking about that then the stock could fall away. And if it does, then that's great. If it goes higher, then there's an opportunity. So that's BHP. But again, with the dividends, even though we like it and it's a good opportunity, you've still got to buy it at the right time, not just jumping in as you were alluding to.
So here's my question. Regardless, BHP, Rio, Tabcorp, FMG, all good stocks, right?
I've got one more.
I know you've got more because you said you had 10.
But I was only going to show the chart of a few because we'll never get through it all.
Why not?
Unless you give me more time.
Oh, well, I'm going to give you more time. Well, no, it's not up to me to give you more time anyway. I'm just saying, so criteria to buy, dividend yield or capital gain first?
Look, I think it's a balance for a lot of people. It depends on the strategy that the person set. So it's not about going out and saying, I like BHP. It's about starting with the point of saying, what's the strategy? What's the term for this portfolio that I'm going to set up? How much money? What type of stocks do I want to buy to fit the overall strategy that I've set? So if it's a long-term strategy with dividend income and capital growth, then you could look at any of the top stocks in the top 50 as a potential to go into a portfolio. If it was that you were looking for a short to medium term strategy and you wouldn't even be thinking that dividends are an issue, because if you're trading short to medium term, chances are that you're not going to get all the dividends in any given year anyway, because your strategy will take you out during that time.
Yeah, okay. Cool, good answer.
All right,
yeah, no,
so that's BHP. I've got Amcor now. Let's have a look at that one. So Amcor actually recently broke out through that high, which is really nice, but it's come back to test, and it's done this a couple of times. We've seen it trying to break through these levels and really struggling. It came back here to this low in March 2022. It's broken out again. So at this stage, we're not sure whether it's going to continue to rise yet. So it's about waiting and just being patient with that. But this stock may be a good one as well. It's another option.
That might be. So these ones you're talking about here is obviously, you started with FMG, Min. So they're the more preferred ones you're talking about?
These are just, I picked these because they're so different in terms of the charts, except for BHP and Rio, obviously, and FMG. I didn't mention Rio, but that's obviously in there. they're different to the mining stocks and different to the banking stocks, which we've talked about in a recent show. But I mean, a person could go and say, like, I'd like to just buy stocks for dividends and capital growth. I'm going to pick stocks like Coles, banks, big stocks like BHP. They could even stick to the top 20 shares, and you'd still do reasonably well getting dividend income and capital growth.
Well, if you bought 10 of the top 20 shares, your average dividend yield would be what, 4% now?
Well, it varies depending on what the share price is, but typically you're looking for something that's 4% and above, or 4.5% and above.
Yeah, but I'm talking about average. If you added up 10 stocks, what the dividend yield was for your portfolio, you'd probably be averaging somewhere around 4%-ish.
Generally.
So that's much better than bank interest rates right now anyway.
Yeah.
So looking at those top 20 stocks, can we go back to the watch list again to have a quick look at that? So these are the top 10 stocks that you've got. Fortescue Metals is number 1, Tabcorp number 2, BHP number 3, Rio number 4, and we're not talking about ranking in strength or anything else. ANZ number 5, Stockland number 6, NAB number 7.
Yeah, just talking about the property stocks. The property stocks can be really good for dividends because they typically will pay dividends more than twice a year. Depends on the company. Some of these trust structures will pay dividends at multiple points. So look those up and find out when they pay dividends. You can look in the dividend history on some of the websites that show the history of the stock. And so those property stocks eventually will be good stocks. It's just at the moment that they're down.
Yeah, so just be patient, obviously. I mean, looking at those top 10 stocks on the screen. So we're seeing a good smattering between finance, obviously mining companies, and a nice little spread there. And
Wesfarmers we've talked about on another show, and I've just saved this one in there because we'd already talked about it.
Told you going to have another one.
Yeah, I can always pull another one out of the hat. So Wesfarmers is a great stock. And if you can get that at the right time when the rules have triggered and it looks like the trend is broken and you get a good dividend, you'd be pretty happy with that.
Yeah. So what are you thinking on Wesfarmers at the moment? Still too early? Way too early?
Yep.
I know a lot of people will be looking at Wesfarmers saying, hey, it's only $40. I mean, why shouldn't I be buying that? Because surely it's not going to fall too much further. And I know people do say that and they jump in thinking it's cheap and trying to buy, but then would you rather buy at 40 or would you rather buy at 30?
Well, people thought that Westpac wasn't going to fall further.
And it did.
People thought that Commonwealth Bank wouldn't fall further. They thought once it got through $100 it would keep going.
Yes.
So, it doesn't matter what the stock is, it can always go lower.
All right, so basically what you're suggesting people to do is look at those top 10 dividend yielding stocks, look for the right time to buy, just not buy at any time. So that's really what you're suggesting.
But what I'm also saying is that you can also go out into the top 50. Can be a very conservative approach to finding good shares in the stock market, even the top 20, depending on whether your strategy is medium or long term.
Well, thank you. I think it's been a really good topic, and I think we've given a whole lot of good food for thought for everybody. So hopefully they've been eating it all up. But that's it for our topic for tonight. Now, before we get into our next email, I do hope you have your phone ready and have been patiently waiting for the opportunity to call into the show and ask Janine and I your most burning questions. So now's the time to pick up your phone and get dialing. The number you need to dial is 0392909988. That's 03 for Melbourne, 92909988. So get dialing now.
While we wait for you to call us, we'll get into answering the next email. So call now. The next question we have is from Look. Dear Janine and Dale, I have my eyes on a technology stock at the moment since you two said that this sector may do very well after being so heavily sold off. It's Codan Limited and it's dropped really hard and fast for about a year now and their value is down below their pre-COVID peak. What are your thoughts on this stock given the tech sector is looking like it's got so many great opportunities? My current plans are to watch list and wait, but I thought it would be a good one to cover on the show. Thank you so much for the incredible show. Kind regards, Luke. Okay, Codan.
Very good.
Yeah.
Very good question.
Yeah, very good question. It actually may be bottoming out, but we can't really see for sure yet because the monthly chart, it's just been such a steep fall. And looking at how much of its value it's lost, let's just have a bit of a look across here. We can see 68% fall. Do you think the fall's over?
No.
Okay.
No.
So you think it could be a false rally?
Do you want me to think about it? No.
That was pretty short and sharp.
It is pretty short and sharp, and the thing is, sometimes I feel like we're broken records, and it happens in the market. We're either saying everything's bullish or everything's bearish, or we have to wait for a little bit, and that's just the thing of the market. So right now, way too early to think about this stock at the moment, isn't it? But I think put it on your watch list for sure. Yeah.
I agree. I like it. I think
does.
it could do well.
But falling 67%, it's almost in no man's land at the moment. There's nothing underneath it to find support at the moment that I can see.
So if it falls, do you think it could go back to the COVID low?
Look, I think it has a distinct possibility to getting right back to that sort of COVID sort of low, but you never know, because, I mean, stocks could fall. I mean, its all-time high is just over $19, so it could fall under $2. It really could.
Look, I'm thinking if it goes...
But I'm not saying it will.
No, I'm thinking if it goes through this high here, this little one here, there's a possibility that we could get a decent return out of it in the short term, but it'd be a higher risk.
It'd be a higher
risk. It depends
risk
on your strategy, whether your portfolio can allow that, given the nature of this stock and the liquidity of this share, but that would put it above this level.
Yeah, it would put it above this level, but it needs to do that before I even start to get mildly interested in it.
Okay.
It takes a lot to get me excited, you know that.
Okay.
You know?
I've seen it.
Yeah, stay away from it too. Anyway, but Janine, we do have a caller on the line. Welcome to the Australian Stock Market Show. You're on with Dale and Janine. Who have I got on the line? All right, we don't have anybody on the line. I thought they were there, but let's have a look. The next question we have is from Anton. So, who says, "Hi, Dale and Janine. I've invested in TGR in 2021. My reasoning was that it had consistently increasing earnings. It was also seeing positive results from expanding into prawns, which had future growth potential, and this was not reflected in the price. It's been going up slowly and has reached a price I think reflects the value of the business. I think I should sell, but it is still trending up and it might be good inflation recession stock. Should I hold or stick with my original sell plan? Thanks for your thoughts. They are always very insightful." Karen, really good question, isn't it?
Very good question, and look at the share price.
Holy moly.
Are you going to say something else then?
No.
Okay, so the purchase was actually in, this is a bit of a beat your chest one, I think. It looks good.
It is.
It's actually gone above the high in the GFC high.
Yep.
This stock actually peaked late. It peaked in January 2008, so showing the resilience in a decline is really a good thing to look back on any share. Now, we've seen this terrible consolidation. It's not to say this stock could get stuck again. Just because it's had this strong rise doesn't mean necessarily that it's going to take out the high up here, but it actually has improved its chances of doing that.
Yeah, it has. But it took a look. I mean, you have a look at the weekly chart. I mean, in 2 weeks, it's gone from 350 to 460. It's gone up, massive amount.
Yeah, I wonder about that because, how can a stock take out a low? So it took out that low in December there, which was important, and all of a sudden turn around that month and go up. It just seems a bit strange.
Yeah, it really is a bit strange, and I'd be looking at the announcements on the ASX to have a really good look at why it's moved up, because when you get to see that strong movement, I mean, in the current bar, that last bar on that chart, that's 2 days. That's yesterday and today.
Do you want to see the percentage?
It's massive.
I'll just look at that, the week.
Look at that. That's just
20%.
in 2 days. So something's going on there now. And normally when something's happening, normally when somebody says to us, the stock's going up, should I get out now? Because that's my plan. We'd go no, because the whole idea is if a stock's going down, you get out. If it's going up, you stay with it till it stops going up. That's really what we talk about. And that's
but
the whole...
But if they don't have proper rules, I'd be taking some money off the table if
Correct.
That was me and I didn't have proper rules.
Correct. So while she's got a thinking of its proper fair value, it doesn't necessarily mean it's going to stop at that.
No,
because
you're right.
The market,
could just shoot through
stocks
the high.
rarely trade at their fair value or their intrinsic value. They either overshoot it or they undershoot it. Does that make sense? I don't know. So they're either overvalued or undervalued. Right now, you're saying it's fair value, but they will generally go overvalued before they peak out and then come back down again. But this went off like a rocket. So it wouldn't surprise me if we had a bit of a pullback over, maybe this week or even the next week or two.
Yeah.
just to ease off because it has taken off like a rocket.
Short-term
So-
profit takers might be in there.
So maybe take some, what did you say, for 50%?
Well, it's her decision. She's got to decide. She was thinking about taking some
I wouldn't
money.
take it all off the table though.
You wouldn't if it was you.
No, I wouldn't take it all off the table. I'd probably take some. I'd take my capital probably off the table and let them play with the market's money here. But
Okay.
I'd want to look at the announcements first and find out why this has taken off like a rocket.
Yep, okay.
Just to see whether it's sustainable or not.
Great.
Yeah.
Our next email is from Anton. Hi, Dale and Janine. I noticed in today's market report that almost all of the worst performers were miners. I do have one in my portfolio as well, which is Oz Minerals. I bought it mid-December as a medium-term trade. The stop loss was triggered 9th of May 2022, although as it was just a drop for 1 week, I did not sell. It went back up a bit the weeks afterwards, only to drop away. And with a gap of about 10%, currently I'm down around 35%. Now my question, do you think it's worth hanging on to it and reanalyse the situation once it's back up around the upper gap end? What's your opinion on the closure of gaps and how likely it is? Thanks a lot for your thinking as well as your great work, and looking forward to all your new material you mentioned to be coming this year. Anton from sunny Austria, it looks like.
He's also invited me for a beer. I took that off because I didn't.
It said Austria.
I know, he's from Austria. He watches
Wow.
us from Austria. Hello from Austria.
Fantastic.
Yeah.
Oh, so beautiful.
I can't even, my myotherapist, that's a long word, isn't it? She's from Austria and she's actually there right now.
I've got a puzzle that I've actually never put together that's from Austria. It's just it's so lovely. I just leave the box sitting there and look at
Oh,
it.
dude. I love skiing Austria. I want to go back and ski there
Can we
again.
get into the chart now?
We can, if you have to. So should he live in hope of it filling that gap anytime soon?
I would not live in hope about any stock. It's not a good strategy. So the first thing is, okay, if we can just have a look at the chart and where he bought.
So the two things are he should have been out already.
I want to just go back to where he bought.
That's right. Okay, I'll shut up.
All right. So here is where he bought. Now,
Okay.
you weren't to know that that was going to be the peak,
No, you won't.
because it just went through its all-time high, and often stocks can pull back after their all-time highs, but then they can continue on.
Yep.
So I think it's just a timing thing. It's one of those, 1 in 10 trades or 1 in how many ever trades that it's going to turn down. And this sideways move was a big telltale sign when
It
it
was.
turned down and then pulled back strongly, telling you that it's more likely to keep falling. The stop loss was probably fine where the stop loss was. It could have been a little bit higher, but now it's taken out that twice.
He should have been out, yeah.
Yeah, so you've really got to ask yourself, why am I still in this share? It could turn around and go back up and fill that gap. I can't tell you how soon it will fill it because there is no formula for how long it takes to fill gaps. It varies, not just between stocks, but it varies on individual stocks. So
Some days, months, and some are years.
yeah, I mean, look, it looks like it's trying to find support right now.
Yep.
Looking at that, there's a nice little candlestick, a little doji there that might...
Again, 2 days, too early.
But it's too early because you don't know until the end of the week. You've got to wait till the weekly close to see how it unfolds. It could continue down by the end of the week, and that's
then you
the
might
problem.
get a couple of weeks up and then a turn around and fall away again.
But if it started to close high at the end of the week, would you just wait and see? Given his, if you were still in it, which
he
you
hasn't
wouldn't be,
taken
but
his stop loss at the moment, has
he
he?
hasn't taken the stop loss.
Okay, so I would
He's just-
manage myself out of that then if I haven't taken it.
Well, he's just waiting to see whether the stock's going to rise back up again. So if it closes high by the end of the week, it might go higher next week.
Possible. It might go higher for the next 2 or 3 weeks.
But what you're saying, you still got to draw the line in the sand. If it does turn down
Always
again,
have the exit, yeah, correct. And that's
yeah.
the thing is it might go up for the next 2 weeks, but then turn around and fall away below where it is the low of this week.
because
So-
I mean, where could it fall to? There's a gap. Actually, just talking about gaps,
There's one
there's a
right
gap
there.
all the way down at June 2020. Now that would be a complete disaster.
Well, based on the
If
theory
you-
is does it fill that gap first before it fills the gap it did 3 weeks
Well,
ago?
it doesn't have to fill all gaps.
Correct. That's what we're talking about. That's what I'm saying is, so which one do you fill first?
I'd probably be looking at the weekly chart. Since we're having this conversation on gaps, I'd just see if I can expand that out.
We don't have to have the conversation.
I know we don't. I know you don't like talking about these. But look, there's always a possibility that a stock can come back to prior levels of support, which is all the way down here.
Yep.
So if you don't want to talk about the gaps, you'll talk about this though, won't you?
Yeah,
So that could be a level where it falls to, worst case scenario.
correct. Could be. Anyway, but that's our take on Oz Minerals. And if I do get to Austria, mate, I'm going to look you up and we'll have maybe some snaps and a beer, something like that anyway. But now we have an email from Greg who says, "G'day Dale and Janine. My question for today is surrounding Aristocrat Leisure. I do not hold it, but I've previously held it, and I'm looking at getting back into it and holding it for greater than 12 months. My current plan is to wait for it to close higher than its last high of $36.03 in May and then buy in the next few weeks if it does this and shows continued support. My sell strategy would be initial stop loss of 15% in conjunction with a sell trend line on a monthly chart. If it forms, would love to hear your thoughts on my plan, and if you have any additional advice before I purchase this stock. Cheers, Greg." We also had a similar question from Walter on this stock, and as I said earlier in the show, we already had a bit of a look at it for another gentleman. So anything you want to add on the one we did last time from
No,
Aristocrat?
but I just wanted to ask you, what did you put in that curry?
What did I put in the curry?
If my tongue just started to expand and I fell on the floor, what would you do?
I'd take over because you'd probably be going somewhere in a hurry. Can we focus on the stock market?
Yes. All right, our next email is from Ben. Sorry about that.
No, we've got to answer Aristocrat Leisure again.
Wait, do we? Oh, okay. Gosh.
I don't just read the
I said
email.
to you we should have just answered it in the first one. Why didn't we?
I just said, have you got other stuff to answer it at the moment?
All right, look, where would you like to start?
Well, I'm looking at that big picture. I love that big picture. So,
Yeah.
so it's been falling away from $50 to $30. So at this point in time, whilst we think on a weekly chart it's looking, when you look at things on a monthly chart, and this is one of the things we need to look at, is that you and me always go back to looking at the monthly chart first and look at the whole history. And this is what a lot of people don't do when they're looking at online platforms, like broker platforms, because often they can get maybe a couple of years, sometimes 5 years, sometimes 10 years, but generally not enough. We can do stocks like this is 20 years or plus. So it tells us how this stock's going to unfold. But looking at the monthly chart, is that looking bearish or bullish?
Bearish.
Okay, so they're looking at whether they get in above that $36. So if we go back to that weekly chart, so let's have a look at it. Looking at this weekly chart, this could be just a bit of a sucker's rally. It could bump its head on this or fall over. But right now, is this enough of a signal for you to get into this stock?
If it goes through that peak.
Or would you still be doing other research and other
you still do other research, but that could be enough. Depends on the rules.
Yeah, so if this person was looking at Greg was looking at holding it for 12 months. Now, I don't necessarily agree with putting that time frame of 12 months on it. So it's so longer.
Oh gosh, no, because it could go up for 6 months and then down for 6.
And down for 6 months. But it does really, really trend well. So I do like the stock. I think they should be looking at it. I think they'll probably do a little bit more research on it though. That would be my thoughts.
Have to tick some decent boxes, wouldn't it?
Yeah, but again, it's one of the better looking top stocks at the moment, isn't it?
It is.
Okay, so you're smiling at me, which means you're agreeing with me.
I'm smiling because I'm agreeing. I don't like it.
You're saying, Dale, shut up and let's move on.
All right, our next email is from Ben. Sorry about that delay, Ben. Hey team, brought Worley on 24 May. The plan was to hold long term with 15% stop loss. Over the past couple of weeks, with everything that's been going on, I thought it's held up okay, but what concerns me is that this low has gone slightly lower than the last trough 10 weeks ago. Would love to know your thoughts and analysis. Cheers, Ben. Thank you so much for the question, Ben. We love talking about these sorts of things, and Worley's a really interesting stock, isn't it?
It is. It is. Normally it goes really well when the mining's going. So
yeah, now he bought it in an uptrend.
Yep.
Right? So it was rising.
It is.
I guess the challenge here is that it had been rising for 1, 2, 3, 4, 5,
and a bit
it's
months.
5 months it had been rising for because he bought in May.
Yeah.
So, the chances of the stock peaking soon were probably reasonably high.
Yeah.
Especially if you look at the fact that there's some resistance going on over there. So we can see here on the weekly chart where he bought in, if we just, if the chart will behave itself, it's a bit like you, out of control. And we can see that...
I'm not answering that. I resemble that remark.
You resemble that one. You can see there that the stock has pulled back. It's pushing up to fill this gap. We need to just see whether it's going to fill that gap or not, but the problem is it may turn down from there again. If it goes back up through that high, we know that it's continuing the trend and it could do really well from there. But at the moment, it's in that no man's land.
I wouldn't be worried about this at the moment if I was Ben, as long as I've got a stop loss on it.
Well, that's right. And given where it's trading at the moment, it's holding up for him.
I think, yes, he probably should have expected it to peak soon and come back, because that's what, stocks go up in stairs. They go up a bit, they come down a bit, they go up a bit, they come down a bit, they go up a bit and come down a bit. That's what they do. So we need to give them room to come down a bit, which is, I think, probably what this stock is doing right now, but stay with it.
That was almost a moment at the tennis, just watching your hands go up and down. It was almost hypnotising.
Okay, let's get back to the show.
Okay.
We now have an email from Len who says, "Hi Dale and Janine, my question is about taking profit on a certain stock, Silex Systems. I bought this stock last January 2021 at 91 cents. I plan to hold this stock short to midterm, but the chart still looks really good. I temporarily put a stop loss at $1.70 yesterday. My question is, should I sell it now and stick to my original plan, or keep the stop loss at $1.70 and let it run? Regards, Len." The old adage in trading, Len, is let profits run, cut losses short. If stocks are going up, stay with them while they're going up, but you always need to have a stop loss on it. Your turn.
Dale's advice is very good, and the fact that he does have a stop loss tick,
I think is excellent.
He's doing really well.
Yeah.
I like this stock. I think it's really interesting. I'm just looking at it from a long-term perspective. Let's just have a bit of a look. I mean, this could be bullish long-term.
Yeah,
There's a very real possibility, and the reason for that is it all depends on where it closes this month, right? So if that high there in January, there's another one here, and that was in September 2021, and now we've got this bar's closing high, looking strong, going through all that. I think that looks lovely.
Looks good, doesn't it? Looks very rhythmical and everything else. So again, just have a stop loss on it. That's really all you need to do, Len, is make sure you've
and then
got
lift it up,
risk.
Just as it keeps going.
Correct. That's what I was saying.
Place.
It's like anything, you do need to get that floor, and that's why stocks we talk about them going up in stairs, because when you walk upstairs, you pick your leg up, put it on the next step, get the leverage to go to the next step, and then you put your foot down to get the leverage to get up to the next step. What are you laughing at? Don't you like my stories?
I love his stories.
Okay, fine. Len understands me. Okay. It's okay, Len. Just make sure you've got a stop loss on it and keep moving that up as the stock moves up. But right now, Janine actually likes the stock, and so do I at the moment. But thank you for sending your question in. But Janine, that's our thoughts on Silex Systems. But I did want to thank everyone who's taken the time to comment in the YouTube comments, always taken the time to email us. Now, we do appreciate your feedback.
We were just getting warmed up. You've been asking us great questions, but now I want to ask you a question so that we can help you. My question is, how many stocks do you prefer to hold in your portfolio? That's a good one,
question.
isn't it? Yeah, so write your answer below this video in the comments section. If you're listening to us on a podcast, you can still send us an email with your answer. Before you do, give us a 5-star rating and review on whatever podcast app that you're using.
Yeah, absolutely. Now, if you have enjoyed tonight's show, give the team a big thumbs up. That means click the like button underneath our video to let us know that you've enjoyed the show.
If you want us to answer your questions, then watch our show next Tuesday between 7 and 8 p.m. Pick up the phone and give us a call, as we'd love to chat with you. If you are not able to watch live, you can email your question ahead of the show. You do this by sending your email to info@wealthwithin.com.au, and remember, include Wealth Within Live in that subject line.
So much true, so true. We really do appreciate your support for the show, and you can show yours by subscribing to our channel and hitting that subscribe button now.
Well, that is it for tonight's show. We do hope you enjoyed what we presented tonight, and we've so enjoyed receiving all of your emails, and thank those who called into the show. We love the opportunity to chat with you personally.
As always, thank you for joining us, and we do hope you have a great week. But for now, goodbye, good luck, and good trading.
Good night.